I think you could probably be looking towards 26, maybe 27 as a handle between now and year end. Obviously, everything's going to be dependent on not only the global geopolitical headwinds that we're facing, but also the main stimulus packages that are likely or hopefully going to be announced in the next following weeks coming out of the mainland. And more importantly for Hong Kong stocks, especially the domestic plays, the props, the banks, whether they can sustain and weather the continued storm that they're currently facing. So, yeah, we would say that there'll be a modest increase in terms of performance between now and year end in Hong Kong. But really, it's probably first quarter 2021 that you're really looking for that gap between the A-share market and the H-shares to narrow. And in that, what I mean by that is the Hong Kong to play catch-up as opposed to China to continue to potentially reverse those gains that they've made this year so far.
Got it. Andrew, I like how you said hopefully the stimulus measures will get coming out of the mainland, because as we've learned from the United States, it's never a done deal until it's signed and delivered. But fortunately for China, they don't have to deal with all the partisan bickering like we do out of Washington, D.C. So what are you looking for in terms of additional stimulus measures? And then what would that translate to in terms of strategy?
Well, again, if you look at, we've got in the next following weeks, we've got the plenary meetings coming up in Beijing. So, from our point of view, we'd still be looking for the infrastructure type plays in terms of stimulus, which at the moment hasn't really been announced. They've been much more specific into certain industry and sector, but much more of a broad-based, resilience in terms of a package towards infra and the local economy is probably what we're going to see in terms of that type of stimulus, as opposed to, as you rightly say, what we're seeing across the West and especially the US and European markets, where they're much more specific in terms of funding and bailout packages to individual sectors and or individual companies. That's probably less likely to happen. Obviously, the Chinese economy is in a very different state in terms of the reopening, but also in terms of its makeup and structure. So we would feel that there will be lots of commitment and lots of rhetoric towards commitment to certain parts of the economy where they feel the stimulus is needed, as opposed to direct investment. Apart from, say, the infrastructure model and the infrastructure plays, which obviously will be so broad and widespread across the rest of the economy, that we feel that's probably going to be more that's going to come out of the next couple of weeks in China than actually anything specific.